Hello and welcome to the Wednesday check-in here on Landy's Crypto Corner. Today is November 6th, 2024, and we are post-election now, and we have seen the initial Trump pump candle. So what does it mean? Well, you might remember that I've been saying above the all-time highs at 73,835 for Bitcoin here that I'm looking at a zone of around 73 to 75 and then 75 to 78 and then mid to 78 to 80 and then mid to low 80s from there. And Bitcoin has hit the first of those upside target zones. And when I'm talking about this stuff, I often get a lot of questions of like timing. Well, the reason why I give some of these zones is because I'm looking for the initial resistance. And I did want to talk a little bit about that today. I also wanted to talk about kind of what my thoughts are and kind of recap my thoughts on the longer term timeframes really quickly. And of course, give you some areas to pay attention to should price get a little bit more volatile back to the downside. So we will discuss that. You'll have to forgive my voice. Been doing a lot of celebrating, quite frankly. It's been a long road to the election, and for those that understand kind of where I'm coming from in that respect, it was not exactly the easiest road, but this is encouraging price action. We had already seen the criteria met, and I do want to kind of cover the criteria that we discussed on Monday for a higher low being set. So in terms of structure, we had a very favorable setup. I talked all about the uptrending structure here that turned around, swung the highs or equal highs over here, and then went into a downtrend. Then we had a downtrend break here, higher low, higher high, trend reversal setup, and then we had another higher low to equal highs with a higher high swing. So equal highs on the close, maybe slightly higher high, and then a breakdown, so a trend break. And then we started to get into this kind of choppy, changing market. And you might remember that I talked about how the market structure was beginning to change, not just on the daily, but on some of the higher term timeframes, where we were likely going to see price kind of chop around sideways within this range, with conditions that needed to be met for further downside and further upside on closes. But, we had essentially the big trend break to the downside, the lower high, higher low, higher high trend reversal setup on the daily, then a breakdown to kind of take that off the table into lower lows. Then we had a lower high, higher low, higher high trend reversal setup. And then, of course, we had another higher low, lower high. And this is technically a lower low on a swing and a close for Coinbase. And it wasn't for every chart, but it definitely was for Coinbase here. And then, that was a trend reversal setup for a further downside move if we saw, continuation below that 58,863 wick low, to go and test further down, 57.5 to this 58.4 level, and then down below into the risk zone there. And then, of course, we got the higher high, trend break, higher low, trend reversal setup with a higher high. And this is kind of where we were coming off of this higher high coming into Monday there. The last video, and I had mentioned that I wanted to see closes above around 69,400. We did get, it. We got the low set. In this case, another higher low. So we have a complete trend to the upside. And I'd mentioned that above there, above 70 to 72 or so, somewhere around this above here, the bull run begins zone, that, we would see the highs and higher as a zone of around 73 to 75 initially. And just to kind of point out why I said initially is that first big candle that broke out to the upside, guess what it hit? $75,000 exactly. And of course, above there, the kind of zone of volatility interest is between 75 and 78, and then 78 to 80 and mid to low 80s from there. So, it is, we've seen the first bit of that criteria to the upside being met. We have seen the daily break out and close pretty substantially above its prior all-time high, and wipe out a lot of leveraged shorts as well along the way here. And what does this mean for the daily right now? So let's talk about the daily. Then we'll get into some higher term timeframes and maybe even check on some lower term timeframe stuff. We'll see what how this goes. I'm just going to go with the flow here. So we did talk a little bit about how things were kind of setting up and getting a compression. I wanted to see support, and I'd mentioned that after getting a little bit of expansion and kind of riding the upside of the upper side of the bands here, that pullbacks that lose the basis need to save themselves at around that lower first standard deviation, and it was confluent with a zone of support here that I was, looking at the potential for that condition being met to set that higher low here. And then, we were looking to the highs and higher on any, even shorter term time frame closes above that 70 to 72 resistance and those lower term time frames. Now, in this case, we got it all in one shot, right? And I'd mentioned that things were probably going to get volatile. In this case, they got volatile to the upside. And this is now kicked off expansion to the upside. So you see the little bit of a pinch in the bands here. So we got some compression to expansion. And now to maintain this expansive posture to some of those deeper targets that I just discussed here, I'm looking for closes to maintain above, and I am saying closes maintain above the upper second standard deviation. And that is currently coming in at 74,609. Always got to have a meme number in there somewhere. 609, just put a 0 in between the 69. But in this case, basically above 74.5 is where I want to see daily closes come in. Sorry, my giant beard is kind of getting in the way of the microphone there. Now, this is where I would look for continued expansion to the upside and increasing volatility in the lower term timeframes. And that is kind of the name of the game right now. Pullbacks down into this green zone around 71.5 by this upper first, almost $72,000. Guess what? We want to see that area flipped back into support in the lower term timeframes. Could even get, test down into the upper $72,000 area. If you start to see this close open lost in lower term timeframes, then start looking to $71.5 to $72,000 where the daily upper first is. You want to see closes maintain at minimum above there. If we do want to see continued expansion back to the upside, of course, more aggressive expansion to the upside is going to occur on closes above this upper second here for this now Thursday candle, because the Wednesday candle is closed. And, we can see the upper third did get closed above. That's good to see. And you'll typically see that on any kind of compression to expansion like this. The upper third, if Bitcoin does start to push there, is in the low $77,000 area. So again, above $75,000 where we currently sit. I'm looking 75 to 78. If we see closures above 78, then it's kind of 78 to 80, kind of a logical area to pay attention to at a whole round number like $80,000. And this is great news for bulls and very, very bad news for bears. I do think that things are really starting to get set in stone. We'll expand on that in just a moment. I'll expand on that. I refer to myself as if I'm more than one person. Jeez. I did want to talk about, we just covered trend, support, and resistance, and then now we're going to cover our and volatility, and now we're going to cover our fourth pillar here, and that is momentum. This is a regular Stoch, of course. I say this a lot, but I do want to make sure that anybody new that's watching this understands that this is a regular Stoch, which measures close over close price action or price momentum. And it is not a Stoch RSI, which is measuring the velocity of RSI. We already use RSI. We will check that in just a moment. But in this case, we do see a nice bounce off right around the mid zone for a regular Stoch. And you might remember I mentioned, I believe on Monday, I think I mentioned this, is that, you can play trend lines for a regular Stoch, and they're not always going to line up perfectly, but, roundabout, we kind of had a little bit of a trend line here, kind of getting front run. Can't even draw it correctly because I'm being a little lazy on it. But, there was even a little bit more room that it could have turned around, but it held the zone beautifully, putting in that higher low. And that's actually what we were looking for, right? I don't remember quite what the pivot number was for momentum, but it was certainly met. 71,300 is going to be the momentum pivot. So if we do start to see price closing back below that 71, and a half zone, eyes on that momentum pivot. We could be looking for a little bit wider of a pullback, and that does mean that we are, likely looking back to, somewhere around where the basis band is, the run the highs above here zone, 70,000 to 72, essentially, where the upper first is kind of the zone of interest again. So just the same zones of interest that we were looking at as areas of interest to the upside as resistance that need to be recovered to go test the highs and higher. We want to see those areas on any retest turn into support. If it is lost, then we start looking back to, below, $68,000 and below, down to our pivot zone here where the lower first is starting to come in at just under $67,000 to the top side here at 67,200 to 300, depending on your exchange. I don't want to see this low taken out, right? So we don't want to see 66,800 or so taken out on any kind of a close. It's fair game to get swung if things get really volatile, but understand that to preserve this upside expansion, I really don't want to see closes back below the upper first standard deviation. Mean reversion back to the basis is fine, but it would blunt the expansive posture that we see going on right now. So I would be keeping an eye out for continuation to the upside here, maybe lower term time frame pullbacks. They're just fine. Again, $71,500 to $72,000 is kind of the area of interest to pay attention to from a volatility standpoint and a support and resistance standpoint. So let's go ahead and take a look at the actual RSI here. So what I do want to call out is if we don't see continuation of expansion to the upside in terms of price volatility and price action getting closes higher than yesterday's swing high, that is going to be coming in at 76,500 or so. If we don't see closes above there, we have to keep a close eye on if a closing high is set here. One of the main reasons why is because you can clearly see that if we don't get continuation and it were to close a high here, we would have bearish divergence, and this would be in trend bearish divergence. So I wouldn't be looking at that as like something that is crazy significant. It would be just one indication that we could be seeing a little bit of a pullback, maybe back into consolidation, testing some of those areas to the downside that I just spoke of. But it is something, just to keep an eye on. Again, above, 74.5 or so, I'm looking on closes specifically. Wicks can kind of come down, but on closes, above 74.5, I'm looking for continued aggressive upside expansion. We are also seeing this reflected in BBWP. That's down here, 62 over 40. That is expansion kicked off. It's healthy. It looks good. It's got good distance from the moving average here. I like this setup. Looks very, very good for continued expansion to the upside, and even some room, to be quite honest, for some mean reversion all the way back to the 20. As long as it's not losing it and it's staying in the strong half of the bands, looks very, very good. Let's go ahead and talk a little bit about that weekly setup, because I'm using the bands as areas of levels of interest for volatility to the upside. And this is kind of my bread and butter. I'm a volatility trader. So, while I will reference confluent areas on Fibonacci's and, maybe even pull out a chart and start calling out some patterns every once in a while, that's simply to kind of illustrate the point for the confluent areas of interest that I'm going to be picking out here as we move forward in this market. But let's go ahead and get rid of the, we want to keep bands on, my bad. Let's go ahead and get rid of the accumulation distribution zones there, which is just, support and resistance levels that I wanted to name to illustrate my point. Let's go ahead and flip over to the weekly really quick here. And you can see that the upper third standard deviation on the weekly is right around 78,650 or so. Now, we're coming off of this kind of a range setup for the bands here in terms of volatility levels of interest. We wanted to see the 73. This is now getting pulled up. The upper second was at $73,000, right? So that's where we're getting 73 to 75 as kind of our target that did get hit, as the 75 level was confluent when we were looking at it the other day. from the daily as well, in terms of the perspective area and respective areas of interest. Now, for the weekly, I want to see closes above here. I want to see closes above 73.5. That's essentially right around last week's high. And I had mentioned that, the ugly candles, but as long as Bitcoin was closing anywhere above 65, everything's fine. Don't worry about it. If you're bullish, and if you're bearish, you want to see closes below there to get some further downside price action. And you probably would have positioned already, and probably are no longer in that position if you were trying to position for that kind of a setup, which was not showing itself, right? We were in higher low, higher high structure on the daily. So this would be the next kind of phase. If you look at the upper third, obviously being just over $78,000, if Bitcoin does continue to push up that way throughout the week, we're likely to see that start to get closer to $80,000. So that's where we're getting that, 73 to 75 is an area of interest. We've seen that fulfilled and now trading above, but still relevant, by the way, as an area of interest, even on pullbacks down to that 72 to 71.5 or so, to remain expansive on the daily here. But in the context of the weekly, closes above the upper second are going to be very good, coming into Sunday. If we start seeing the etchings of closes above, that's weekly expansion to the upside here. And when weekly expansion coming off of a nice consolidation and a trend reversal setup on the weekly, as we do have higher high, higher low structure, right? We had that $65,000 lower high broken on the close at 65,600 with the wick there at 66,550. We had our higher high trend break, higher low structure thereafter at 62.8 on the close, and that big quarterly all-time high, prior quarterly all-time high on a close. Again, $69,000 was the swing high, but the quarterly closing all-time high from the prior cycle was at around 58.8. And we got a nice move off of that level. Nice reversal candle setup here in terms of the Morningstar reversal if you're into candle patterns. And then, of course, we were looking for moves back to the highs, right? After this pullback, we were looking for anywhere above basically 65 essentially, and 65,600 especially, for moves back to 70 to 72, and then 72 to the all-time high and higher. We have now seen that. We did get two kind of indecisive weekly candles here with a bear hammer and a inverted bull hammer here, which was, as I'd mentioned, not something to be concerned about until we saw, the high put in on any closes below, that week's open there from the 21st. Below the actual close, which was at $68,000 essentially, then we'd be looking for test down if it didn't already test down to like 65. And then it's only on closes below there that we were kind of like, okay, the high's in. We're looking for either, higher low structure or test down further. And then we come back to it later. Well, we got the more preferable scenario. That was a move back to the upside. Again, it's still a long week to go. It's only midweek right now. But very encouraging price action here. Want to see closes above 73.5 on the weekly. Then, we're looking at that 75 to 78, 78 to 80 area. And then just to kind of wrap up my thoughts on that, as I will be discussing the weekly again on Friday, the monthly, very, very clear, mid to low 80s. What have I been saying? That is where the upper second standard deviation is. Again, we have higher low structure solidified here from the October into November candle on a close and a swing. So the swing was set at 49K and the close was set there at 59K essentially on that October closure, kind of solidifying this entire structure as our next higher low. In comparison to this $25,000 higher low, or just shy of $25,000 higher low on a swing and a close there at $26,000. So this is our most recent higher low structure on the monthly. When we are closing above the upper first from a volatility perspective, we look to the upper second, which is in the mid to low 80s. If Bitcoin continues to push up there, we're probably going to see this stretch out a little bit intra-month to, that maybe even $85,000, slightly above. Bitcoin starts to close above there. $100,000 is on the table at the upper third standard deviation. And for those that love fibs, if Bitcoin does start to close above the upper second, you're likely going to see that upper third come directly in line with this 1272 right here. And, even as Bitcoin begins to push up, I know this is an unconventional fib level right here, the 1.168, not 1.618, which 618 is, that's Fibonacci levels that many people pay attention to. But in this case, we're likely to see the upper second start to head towards the deeper 80s, especially on closures above the upper second. That's going to start to kick off re-expansion. And guess what? We are actually in terms of price volatility as it relates to the bands, it's actually in a contraction phase. This would start to kick off that expansion phase, targeting that upper third right around $100,000 and above by that 1272 that's there at 103. And closes above there, we start kicking off the run. And just for a little bit more context, every time Bitcoin actually initiates its run, it's not just above its prior all-time highs, like back here in November when it closed basically right on the all-time high and above the upper second and third standard deviations of the Bollinger Bands. What does it do? It trends outside the top side there, and that's where we can start looking at some really deep targets. We'll cross that bridge when we get to it, maybe sooner rather than later. We shall see. The market is very, very excited right now. And for good reason. Crypto-friendly administration was elected to power with a mandate in the House and Senate. So even grabbing the popular vote. So this bodes very well for crypto markets. Likely markets in general. That doesn't mean that markets are going to go straight to the moon. Higher volatility environments means that moves will be big to the upside and big on those retracements. And like I said, I'm not concerned. I was not concerned about any of the structure. No matter what happened, I wasn't concerned about the structure. Everything looked good. We'll see if we get the kind of pump up that we got back here from 16 into 17. And by the way, this is the extent of the chart on Coinbase, but this is a good reference right here from March. January 15. Oh no, this is January 15. What am I talking about? Duh. It's actually 16 to 17, 15 into 16 is actually what I meant, because 16 is when Trump was elected, and then we got our Trump pump. Again, November into December, didn't get closes above this high, and then started to close above it, and then boom, 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 up and away. And if you really want to see that clearly, you can see it clearly on the index chart here. We trend outside of that upper second and third standard deviation. So nice double bottom there, essentially in 2015 into 2014 into 2015, and then 2016 topping out, rejecting at this high, coming back down, trending on that upper first standard deviation. We have the tests of the prior highs there, and kind of rejected in and around there, a little bit of uncertainty. After kind of approaching that, we got the initial pump up from the November 16, got December, nice pump up, January, doji, a little bit of indecision, move up again, and February, March, of course, we had everybody screaming, from March, April, and into May, screaming, sell in May and walk away, and that was not the setup at the time. Then we got that nice expansion, and it just went from May all the way to December, which was beautiful. And that was actually a little bit, for that surprised a lot of people in 2017. For those that have been following me and maybe know me from previous accounts on various social media platforms, that was something that we were looking for, was this to just continue to rip to the upside. And we'll see how that manifests this time around. I've made the argument that we are in a much larger structure in terms of accumulation. We even had our first downside expansive phase in the bear market here. We had upside expansion to recompression back here on the monthly. This setup is primed to freaking pop to the upside here, especially considering all of the fundamentals in terms of supply and demand for Bitcoin, especially considering what the Trump administration has proposed to do regarding Bitcoin. And of course, with congressional mandate here, and there's a lot that could be done very, very quickly. And we'll see how that works. Again, markets are uncorrelated with the economy in this case. Markets can be very, very excited, while real economic value is very, very low for regular everyday people. Understand that when we're talking markets, that doesn't necessarily mean that things are going to immediately change economically for you or others, but it is certainly encouraging that markets are excited, and I do think that the economic prosperity will follow. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I'll talk to you again on Friday. And yeah, with all that said, Landy out. Take care.